Hey everyone, welcome back to Corporate Decoder, the place where we unwrap the secrets buried in corporate filings. And today we're diving into a filing that is all about some fine print being adjusted. Not a huge financial report, but let's see what is really going on under the hood with VOLITIONRX Ltd. Before we dive in, if you are looking for clear, no jargon explanations of what these corporate documents really mean for investors and the future of companies, make sure you hit that subscribe button. And hey, join our Discord community in the description below. We're building a great space to chat about these things. So what we have here is a Form 8K filing from VOLITIONRX Ltd. Think of an 8K as a report that a company files when something significant happens that the public should know about outside of their regular quarterly or annual reports. It's like a real-time update of important events. The earliest event reported here is the 7th of November, 2025. This is the date we need to focus on for any new developments. The company in question is VOLITIONRX Ltd. They are incorporated in Delaware, have a commission file number of 001-36833, and an IRS employer identification number of 91 to 1,949,078. Now let's talk about what they're actually registered to trade. They're common stock with a par value of $0.001 per S-share. Trades under the ticker symbol VNRX on the Nice American LLC. This is important because it tells us where you can find their stock and what kind of company we're looking at. The core of this filing is under item 1.01, which deals with entering into a material definitive agreement. Basically, this means a significant contract has been signed. So, way back on the 10th of October 2025, VOLITIONRX had announced a public offering. They plan to sell 11,550,000 shares of their common stock. Along with each share, they were also giving out warrants to buy another share. A lot of shares and a lot of warrants. The price to the public for each share and warrant combination was $0.52. The underwriter, Newbridge Securities Corporation, was getting a 7.0% discount. On top of that, the underwriter had an option, a 30-day window to buy even more shares and warrants. This is often called the green shoe option or over-allotment option. It allows the underwriter to buy up to an additional 173,250,000 shares and warrants if there is strong demand for the stock. This gives them flexibility to cover unexpected buying interest. Now here is the news for this 8K on the 7th of November 2025. VOLITIONRX and their underwriter signed an amendment. This amendment changed the rules for that over-allotment option we just talked about. Before this amendment, if the underwriter wanted to buy extra shares, they had to buy them along with the extra warrants. It was an all or nothing deal for the options. The amendment changed this. Now, the underwriter can choose to buy only extra shares or only extra warrants or a mix of both. This gives them much more flexibility to manage their position and perhaps respond to specific market demand for either shares or warrants. And as if to show how this amendment matters, right when they signed it, the underwriter actually exercised part of that over-allotment option. They decided to buy 1194000 of the extra shares and all 1732500 of the extra warrants. Notice this is not a full exercise, but a partial one, and it's split between shares and warrants, which wouldn't have been possible without the amendment. The price remained consistent, with $0.51 per S-share and $0.01 per warrant, still subject to that 7.0% underwriting discount. The filing also lists its exhibits. These are the actual documents that back up what's being reported. The key exhibit here is Exhibit 1.1, which is the actual amendment to the underwriting agreement. This is the legal document detailing these changes. Lastly, we have the signature section signed by Cameron Reynolds, the Chief Executive Officer and President of VOLITIONRX Ltd, confirming these actions on the 7th of November 2025. So, what does this all mean? On the surface, this isn't a report that tells us if VOLITIONRX is making more money or losing money. It's not a financial earnings report. Instead, this is a procedural update. The company originally planned a fundraising through selling new shares and warrants. The amendment to the underwriting agreement simply gives the underwriter more flexibility in how they manage the sale of additional shares and warrants that might be available under an option. They actually used this flexibility right away to buy a mix of shares and warrants. This could be a sign that there was some demand for these securities, or it's just the underwriter positioning themselves. In the grand scheme of things, this filing is about the mechanics of how a company raises capital, rather than the results of its operations. From a Warren Buffett perspective, we don't have the financial numbers to analyze directly here. Instead, we're looking at the process of capital raising. The fact that they are amending an agreement and then exercising an option suggests ongoing activity in the market for their securities. It's not a red flag, but it's not a sign of booming business either. It is simply a refinement of a financing deal. What is your take on these types of amendments in corporate filings? Do you think this flexibility benefits the company or the underwriter more? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up. It really helps us out. And of course, subscribe for more deep dives into corporate documents. Don't forget to join our Discord community linked in the description. We'd love to have you there. Thanks for watching, and we'll see you in the next one.